Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 21st of September 2019 and we're providing our gold and silver weekly update for the week ending the 20th of September. We also highlight something very concerning which happened yesterday geopolitically that we shall mention towards the middle of the video. So please do not miss that, as it is very important indeed. Gold rose $28 last week, from $1,489 to $1,517, having hit a high of $1,517, therefore closing at its week high, and a low of $1,483. In sterling terms, gold finished the week at £1,216, that's up £26, and in euros it closed at €1,375, that's up €31. Silver rose 55 cents, from 17.44 to 17.99, having hit a high of 18.09 and a low of 17.43. In sterling terms, it closed at £14.43, that's up 48 pence, and in euros it closed at 16.31 euros, that's up 0.56 euros. The gold to silver ratio fell just over 1 point, from 85.4 to 1 to 84.3 to 1. The Dow Jones closed on Friday at 27,219, down 159 points on the day and down 284 points on the week. And the Nasdaq closed at 8,117, down 65 points on the day and down 59 points on the week. And the S&P 500 closed at 2,992, down 14 points on the day and down 15 points on the week. The dollar index stands at 98.51, that's up 0.26 on the week. Interesting, even though the Fed reduced rates this past week. Now, we ended last week's update with the following words concerning the Fed's actions on interest rates due that Wednesday. Quote, "If it's a zero cut or 25 basis points, we can expect to see a further weakening in gold and silver prices, perhaps heading towards $14.50 for gold and $17 for silver. If it's a 50 basis point cut, then a resumption of gold and silver's rise will continue, reversing back to $15.25 gold and $18.25 silver very quickly, and then a continual gradual rise. This is, of course, totally discounting any unforeseen geopolitical event which may arise in the interim." Well, when the markets opened on Monday, gold immediately rose, and then fell back a little, awaiting the FOMC announcement on Wednesday. When the FOMC then announced a 0.25% cut and was somewhat cautious about future cuts, gold immediately fell from its price then of $1,510 before the announcement to as low as $1,483 immediately after it, recovering just to around $1,500 as market digested both the announcement and Jerome Powell's comments at the press conference after it. We then issued a video entitled "Why $14.50 Gold and $17.50 Silver Should Be Expected Soon." We've put a link in the description box below if you haven't already seen it. In this video we quoted the following. Quote, "It really does appear that gold is struggling with the $1,500 level and silver with the $18 level, as forays into those territories have resulted in relatively quick reversals. This is why we believe that silver could once again fall back below $17.50 and soon, and gold move closer towards $14.50, though we are still a little more bullish gold than silver at this point, especially if there is going to be a global slowdown worse than anticipated. as this will adversely affect the industrial use of silver, unquote. Now, prior to this, we stated, quote, okay, we have to point out right at the start of this section, if there is more military infractions with Iran, or the China trade talks fail, or some other black swan raises its head geopolitically, then gold and silver prices will rise from current levels, and potentially quite sharply, at least 10%, and quite possibly more before the end of the year, unquote. And after our statement, we added, quote, now once again, the preceding caveats apply vis-a-vis Iran, China, and to a lesser extent, North Korea, unquote. Now, we could not have been clearer. In fact, what was quite interesting is that a number of technical analysts also reported that they expected gold and silver to pull back, and in some cases, much lower than we were predicting. However, something happened on Friday to reverse the whole situation and cause gold to suddenly jump from $1,500 to close at its weekly high of $1,517. Two of the three events we included in our caveat. You see, earlier, President Trump had said China would increase its purchases of US agricultural products as part of a bilateral trade deal, and a Chinese delegation was due to visit US farms in Montana. However, yesterday they cancelled the visit, warning investors with signs that a trade deal between China and the US is far off course. Also, the President stated in a press conference with Australian Prime Minister Scott Morrison, quote, China has been starting to buy our agricultural product, if you noticed, over the last week. And actually, it's been very big purchases. But that's not what I'm looking for. I'm looking for the big deal, unquote. Naturally, that sent shivers through the market. And on Iran, although President Trump stated on Friday that he expected sanctions to work on Iran and that he preferred that strategy to military action, the US at the same time announced plans to send forces to Saudi Arabia, albeit according to Secretary of Defense Mark Esper, telling reporters the deployment would be, quote, defensive in nature, unquote. Now, we're not going to discuss here the wisdom of such a move, or whether politically or morally it's the right thing to do, but it has been announced and has caused a reaction from Iran against both the increased sanctions and the military deployment. This very morning, the commander of Iran's Revolutionary Guard, Major General Hossein, said the country would seek to, quote, destroy, unquote, any aggressor. These two events were catalysts enough to spook markets and cause both gold and silver prices to rise. Before the announcements, silver, which had started the week at $17.44, rose to $17.97 just prior to the Fed announcement, immediately fell back to as low as $17.61 after the announcement, consolidated between $17.80 and $17.90, and then was back on its way down to $17.78 and heading lower. And then, when the Chinese delegation pulled out, immediately jumped to $17.99, at which point markets closed. Interestingly, before we look at the technical aspects of this, there have since been reports from China in the early hours of this morning from the Chinese state news agency that China and the US had constructive discussions on trade in Washington, somewhat attempting to contradict the fears that analysts had concerning these talks. And it has also confirmed a schedule of talks in November. So let's take a brief look at the technicals of both gold and silver. For gold, we saw gold futures soar late on Friday as US Treasury yields fell and investors moved to less risky assets. And let's be blunt here. Traders do not like to have their positions exposed over a weekend, which could herald very negative news. In addition, gold could indeed move from its current level to the Fibonacci level of 1537, and could indeed rise as high as 1542, though normally one would expect resistance at the September highs of 1531. And so this prospect is indeed on the cards for Monday, providing of course markets do not believe that the trade talks aren't failing. If they are, however, not worried about the US troops going to Saudi Arabia and feel that the trade talks are on course, then we shall see a fallback to 1506, which is the uptrending Gann angle, and a potential follow-through back towards 1496, where short-term support levels are calculated. Below that is a further support at the 50-day moving average of 1483. Silver, technically speaking, has some quite serious resistance at or around the $18 level. Though that said, any additional negative geopolitical news will shoot it beyond that level in just one swoop, testing last week's high of 1838. However, if the bad news actually turns out to be not so bad geopolitically, then a fallback towards our heralded 1750 is on the cards, which incidentally currently forms the 50-day EMA, or exponential moving average. Let's now take a look at what economic data is being announced this coming week, which could also affect the price of gold and silver. But just for interest and to recap, last week's data showed higher than expected industrial production figures for August, up 0.6% from a forecast of 0.4%, more housing starts than expected, lower weekly jobless claims, and a slightly lower current account deficit for quarter 2 at 2.4%. On to this week, on Monday, we have the Market Manufacturing and Services Flash PMI for September. Tuesday, Consumer Confidence Index for September. Wednesday, nothing scheduled. Thursday, GDP revision for quarter 2, should be interesting, and advanced trading goods for August. And on Friday, durable goods orders, personal income, consumer spending, core inflation, and the Consumer Sentiment Index, all for August. So Monday and Friday are the two more important days to watch out for, with the emphasis being on Friday. Now going forward to this coming week, we are likely to see some oscillation in both gold and silver prices. We are writing this early on Saturday in the knowledge that more information concerning the China trade talks and the US sending troops to Saudi Arabia is likely to be made public, and this will have a bearing as to what will happen next week. So please bear that in mind. Our initial calculations are that prices may indeed firm a little until more facts are revealed, and providing the China trade talks are still resuming, and the Iran-Saudi conflict does not boil over, we still stand by our predictions that precious metal prices should short-term decline. However, as mentioned in previous videos, if this does not materialize to be the case, then we can expect recent highs to be tested. And of course, if Iran does declare war on the United States, as the Iranian foreign minister told CNN only yesterday that any strike by the US on any of the Iranian installations or fleet will result in an immediate declaration of war, then there will, quite frankly, be no upside limit to the price of gold and silver that can realistically be calculated at this point, save to hazard an estimate that previous all-time highs could indeed be tested. But this would be in extreme circumstances. Now, before we close, we wish to make a personal statement to our subscribers. Unlike most channels, we are prepared to put our reputation and assessment abilities on the line by each week giving our forecasts as to where we believe the price of gold and silver will move that coming week. Broadly speaking, we've been pretty accurate. And where we have been wrong have tended to be vindicated the following week or 2 weeks later. That said, we also attempt to point out where we feel our forecast could be turned on its head, because we're not operating in a steady geopolitical environment or dealing with a predictable US president, as has often been the case with some of his predecessors. Now, we mention these potential anomalies because it is important that you are aware of them and can make your own assessment as to whether they are likely to materialize or not. We're not hedging our bets as one or two trolls who appeared on our channel this week accused us of. We're pointing out to you that having taken into account the known factors, this is where we assess prices to go. But we also point out those other potentialities and do our best to state how even they could affect the markets. This situation with China and the Iran-Saudi Arabia conflict are two good examples of this. We live in a world of ever-changing political and economic fortunes and failures. And for anyone to say that markets or prices are definitely going to move in one particular direction by a specific amount is an almost impossible task. Because, in addition, markets also do not always behave rationally either. Which is why we're proud of our track record. Often contrarian, but not always. And where we have been wrong, it's been a few percent. And not the hundreds of percent other channels, especially the pumping ones, have been over the years. We just wanted to add this segment because many of you saw for yourselves in our fun competition on Wednesday how difficult it was to assess where gold and silver prices would end up just a few hours later that day, let alone a week or a month or 12 months ahead. Thank you for listening. And finally, we have received 3 additional emails from potential members inquiring about our Inner Sanctum membership, wanting to pay for the whole 12 months in advance. Now, we shall repeat what we stated last week and have sent emails to those potential members. If you wish to do this, as we do not currently have the option on the website at the moment, please send 11 months payment for either bronze or silver, as we will give you a 1 month discount for paying in advance, which is $164.45 for bronze and $328.45 for silver. Please send them via PayPal to illuminatisilver@gmail.com. Then send us an email that you've done this again to that email address, though we will pick up the payment, but better send an email just in case, and we will send you a code to enter in the coupon code of the sign-up page. We also mentioned last week that we have an interesting money drop program on our Discord channel to be launched shortly, where Inner Sanctum members can benefit from Money Waterfall, whereby if you are online, you may receive a monetary gift, which could be anything from as low as $10 all the way up to $100. So do make sure that you've joined our Discord channel to take part. More details will be sent at the end of this month. Meanwhile, have a most pleasant weekend and prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.